All right, so welcome to today's webinar. In today's webinar, I'm going to be forward trading my strategy using Forex Tester 2. Forex Tester 2 is a piece of software that kind of allows you to rewind Forex data back to 2001, I think. I think it might even go back further than that, and kind of replay the data and take trades based on this replayed data. So I thought, why not do a webinar using this software? Why not do a webinar where I just pick a time frame, a pair, and I just forward test my strategy? And yeah, there'll be a recording available. So that's what I'm going to do today. I'm going to be forward trading my strategy on this GBP USD chart. I'm going to be forward trading on 8-hour, 12-hour, and daily. I don't want to jump down to the smaller time frames today because it's just going to become too much of a hassle jumping between 5 or 6 time frames. Usually I'll trade the 3-hour, the 4-hour, the 6-hour, the 8-hour, the 12-hour, and the daily. But I don't want to do that today. I just want to stick to 2 to 3 time frames. That way, we can get through this quickly and more efficiently. Claus is asking, wait, I'll show you guys the chat. Claus is asking, is this a random chart or did I pick some nice fitting charts? Now, I got asked this question via email a lot of times. People were saying to me, and it got quite annoying, oh, well, this is useless, Nick, because obviously you're just going to pick, something that you've seen before and you're going to trade it and you're going to know all the trades that are coming. But that's not happening here. And I'm not asking you to trust me on this. I'm giving you a perfectly valid reason as to why I'm not doing that today. I'm not doing that today because there's no real point. I'm not going to be taking only good trades. I'm not only going to be taking trades that I would normally take. I'm going to be taking some invalid trades, some trades that I wouldn't take, because the purpose of today is not really to show you how great of a trader I am, because I don't even think I'm a great trader. I think I'm okay. But, I'm not trying to show off and say, oh, look how much profit I can make. I want to show you how I take trades and how I react when I'm in a trade. So I'll be taking bad trades too, trades that I know are bad, trades that I know are likely to fail. Because today is not really about trying to find the best trades. That's not what it's about. It's just about seeing how the trades work out, seeing how, I'll say I'm going to enter here, and it's about the psychology behind the trades. And I really want to get one point across over all other points today. And that point is basically that a single trade doesn't matter in the grand scheme of things. Oh, wait 1 second. I forgot to open up my risk calculator. Just give me a quick second, guys. I'm just gonna open up risk calculator because risk calculation is kind of gonna be important. It always is important. Okay, position size calculator is open. Yeah, sorry about that. So basically, today is just going to be about taking some trades that I think are going to work out, some good trades, but I'm also going to be taking bad trades that I know have a high chance of failure, and I'm going to show you why they're failing. Wait, let me look at my list of what else I had to talk about before the webinar. Okay, I'm going to start with some of the basics and... oh, damn. Okay, that's better. Okay, so today's webinar, you guys can't see the chat. I'm hiding the chat. I'm going to be hiding the chat until question and answer time. When the question and answer time comes along, I'll throw up the chat and you guys can see what everyone else is typing. The reason I'm hiding the chat today is because in webinars, I tend to get very, very distracted by the chat. And even though I tell people wait till the end for questions, no one actually waits till the end for questions. and then I end up getting distracted and I don't cover everything I want to cover. So today that's not going to happen. Today I'm going to hide the chat. When question and answers time comes up, I'll move the chat onto this window and then you guys can see it. But until then, the chat's going to be hidden. So if I do not see your question, or if I'm not answering your question, don't be offended. I'm not ignoring your question. I'm just waiting till the question and answer times. If I don't see your question, if I don't answer your question, don't start typing in all caps and don't start trying to get my attention, or I'll probably just kick you. That's happened before in the last few webinars and it gets very annoying very quickly. This webinar is going to run about 1 hour. There's going to be about 45 minutes. I'm going to try and get through GBP USD and maybe we'll do another pair. But I'm not sure how much we can get through in 45 minutes. Okay, I'm going to be trading GBP USD 8 hour, 12 hour daily. One thing I did say kind of for this webinar that I would be placing support resistance areas, but I decided against that because I didn't want to waste 20 minutes placing support resistance areas and only do 20 minutes, 30 minutes of actual trading. So I went ahead and I've already placed the support resistance areas based on, you know, this stuff here. I've placed support resistance areas, so they're already placed. There's plenty of support resistance areas webinars I've done before, so I really didn't feel like it was necessary to place them today. Yes, I would like everyone to wait till the end for questions. I will allow some questions, some very limited questions during the webinar, but these questions are going to be more like, if you want me to stop and explain why I'm not entering a trade at some point, then you can ask me to stop and ask about potentially entering a trade there, and I'll say why I'm not going to. If you don't really understand my reasoning for entering a trade, feel free to ask about that and I will answer that. And one final thing before we get started, I really want to get through this quickly. Winning or losing trades doesn't matter. And I'm kind of giving you guys this, I'm kind of saying this right now because the last few times I did this, I ended up taking nothing but winning trades. Now, this was doing it privately for the members of the forum. And that was kind of very annoying. And I didn't like how that worked out because, you know, taking 4 or 5 trades and them all being winners, you don't really learn anything. So winning and losing trades doesn't really matter. If you're looking at one specific pair, like GBP USD 12 hour, for example, and you take 4 winning trades, 5 winning trades in a row, that doesn't mean that if I was actually trading live during that period, I'd be taking 5 winning trades in a row. You have to keep in mind that I would have been trading 6, 7, 8 pairs. So there's going to be losing trades in between. But that also goes for losers. If I lose 5 or 6 trades in a row, trading one pair, it doesn't really mean that I would have lost 5 or 6 trades in a row if I was doing this live, because there would have been other pairs that I'm taking trades on. So if I have a streak of losers today or a streak of winners, you know, don't concentrate too much on that, because I don't really care about the, you know, making money today. Well, not making money, making virtual money today. That's not what the point is. The point is to look at these trades unfolding live and discuss the psychology behind them, discuss, you know, my targets, my stop loss, and all that kind of stuff. So yeah, let's get started with this, guys. It's already been 10 minutes. I think we might make this webinar run a little longer. Okay, so yeah, let's get started. I've only done this twice before. I've done 2 webinars like this, but I've never done it for a group of this size. So this is a little bit daunting. I'm actually kind of really nervous, because even though this is not trading live, you know, I am still, like, I've got what, 200 eyes, 300 eyes on me right now, and I have to forward trade. It's actually quite daunting. I mean, you know, trading by yourself is not daunting, but, well, not for me, but forward, this is, okay. All right, so let's look at this here. Wait, let me zoom in. All right, so what do we have here? Let me get my tools. So here we have a kind of trade that a lot of new people would probably want to take this trade. And this trade does look somewhat decent. And I'll explain why it looks decent. Basically, we got a nice strong preceding trend. So we got buyers heading up towards an area of resistance. So that looks pretty decent right now. This indecision candle is down here though. So I don't like it when an indecision candle is too low. It doesn't form inside the support resistance area. So I want my indecision candles to form inside the support resistance area. Why? Because up here is where sellers are the strongest. Sellers are the strongest up here. The further sellers get away from the resistance area, the weaker sellers get. So if you're entering the trade down here, sellers are already getting weaker, and it's going to be less and less likely that this trade's actually going to work out. Someone's asking about comparing their chart to mine and seeing a big difference. It's probably just your charts are opening at a different time. These are GMT plus 2 charts. They're opening and closing at GMT plus 2 to get rid of that of the sixth daily candle, the Sunday candle. But anyway, I'm not going to be answering questions. I'm actually going to hide this. Please, no questions. Keep questions till the end. So this is not a setup that I would actually take, but I know a lot of people, especially people who are new to my strategy, would see this as a viable setup because you're getting indecision close to an area of resistance. But I wouldn't take this. I wouldn't take this because by the time I get in, right, price is going to be down here at the 158.14. So the resistance area is up here at the 158.90. So we've already moved 45 pips away from the resistance area. 45 pips. Sellers have already pushed down 45 pips. They're going to start getting tired eventually. And I don't want them to get tired too soon. I'm going to enter a trade here anyway. And hopefully it's a failed trade. Otherwise, this won't really prove my point. Now I'm going to be doing my risk-reward ratio a little bit differently to normal. Actually, I haven't figured out the... Sorry, just give me a quick second. I just need to figure out my risk for this trade. Well, my risk is 1%, but I need to figure out what that is. I'm going to put a stop around about up here, 90 pips. Whenever I place a stop, I try to place it behind the resistance area. In this case, behind the resistance area is going to be way too far, but obviously I wouldn't really take this trade in real life. It's actually a very bad setup. All right, so I'm looking at around about... Okay, I'm trying to keep my risk at around about 0.5 to 2%, depending on the trade. So this is a pretty bad trade. Let me go pending orders. I'm gonna modify this a little bit. I'm gonna modify it and put in a take profit around about here. So why is this a bad trade? First of all, my take profit is pretty much equal to my stop loss. So my take profit for the entire trade is equal to my stop loss. This makes this a 1-to-1 trade. 1-to-1 risk reward ratio, not good. 1-to-1 risk reward ratio on your first target, fine. 1-to-1 risk reward ratio on the entire trade, not good. Because then if I were to win this trade, it would only take one loser to wipe out all my gains if I'm trading at a 1-to-1 risk reward ratio. So 1-to-1 risk reward ratio is not good. And that's the problem with this trade. That's why this trade is dangerous. It's because this indecision candle is forming down here. So this forces me to put my entry here below the low of indecision. And putting my entry here, it makes my stop loss larger because my stop loss has to be all the way up there, and it makes my target smaller. So this is in fact a very risky trade. Need to press. All right, so this is a 12-hour chart. So I'm going to pop this up to 3 hours. Okay. All right, so far it's going good. All right, stopped out. And see, that kind of makes sense. Being stopped out there, it makes sense, because if my indecision candle was up here, right? So let me draw this here. If my indecision candle was up here, my stop loss would have been, I don't know. Let's just pretend my entry was, damn it. Let's pretend my entry was here roughly, the 158.68. My stop loss would have been about 60 pips. Then I could have hit 2 to 1 here. This is where I would have hit 2 to 1, right here. And see, that trade would have been profitable if the indecision candle was up here, because my stop would have been tighter, my target would have been 2 to 1, so it would have been 120 pips, which would have been here, and that would have been a profitable trade. But this is why you don't enter trades where the indecision is forming so low from the resistance area. Try to get your trades when the indecision is inside the resistance area. That's where you want to take the trade. Taking them here is dangerous. It's risky. It's very, very risky. So you don't want to do that. 12-hour. Yeah, we'll stay on the 12-hour. That's actually a very nice indecision candle. All right, let's zoom into... Okay, so this is a pretty decent setup. This is actually what I was talking about. See, this candle is forming on top of our resistance area. That's good. That's what we want. We want it to form on top of our resistance area. Because now let's look at the numbers. And the numbers should be a lot more viable with this trade. So entry is going to be here at the 158.65. Stop loss is going to be about, I don't know, we could do 65 pips. Target, with a stop loss of 65 pips, I want to get at least 2 to 1 on this trade. So target is going to be 130 pips. So yeah, target's going to be here, 130 pips. So this trade is totally doable. This trade makes a lot more sense. The preceding trend doesn't start halfway. It starts almost halfway. Starts around about here. It is a bit of a weak preceding trend. Lewis is saying that the preceding trend starting halfway. It is a bit of a weak preceding trend. I don't really like weak preceding trends, but you know, I have this kind of thing with my trading strategy. What I'll do is I'll look at a setup. If there's 1, 2, or 3 things wrong with it, then I'll start, especially 3 things. If there's 3 strikes against it, then I'll probably not take the trade. It's kind of like a risk assessment. So I'll look at the trade. What is wrong with this specific trade here? All right, preceding trend's a bit weak. So that is definitely against it. I would prefer my preceding trend to start down here. That is against it. The preceding trend is slightly weak. Other than that, this is a very nice setup though. I mean, indecision is forming right on top of that resistance area. It's a perfect indecision candle. It's got the red body and everything. I like indecision candles that have body opposite to the preceding trend. So this is really good. It's a really good setup. The only negative thing is the preceding trend. So in my risk assessment, I'd be looking at this trade and I'd be saying, all right, so what has this trade got against it? Preceding trend is somewhat weak. It's doable because it's clearly a preceding trend, but it's somewhat weak. So that makes this trade risky, but everything else about this trade is good. So I'm going to go ahead and take it. All right, entry is going to be about, yeah, here. I'd be happy with here. Let's look at the stop. 65 pip stop, nice. So that makes it a 130 pip target. So we're looking at a target. Oh no, I don't like that target really. Wait, let me do my risk calculator real quick. Okay. All right. Yeah. Okay, I'm gonna do this. I do have another slight problem with this trade. That target being here kind of scares me a little bit. I'd prefer my target up here because price has shown that it can reach here much easier than it can get to here. Getting here, it has only done so once since around about this time. It has only reached this point once. So that kind of scares me a little bit. But still, overall, you know, this is a nice setup. So I'm just going to go ahead. And we'll do this one slow. Oh, no. Damn it. Did I hit the wrong? No, I didn't. No, cool. Never mind. Okay, this one doesn't want to go slow for us. See, at this point, a lot of people would freak out, right? And they'd want to exit. And I can totally understand why. I mean, sellers have slowed down quite a bit. And they've slowed down in an area that they've slowed down before. So this is starting to look like it could... Yeah, this could potentially end up badly. This is kind of why normally I would take half my profit here, but it's just going to be too complicated to do half profits and stuff like that in this webinar. I just want to get through this quickly. So I'm not taking half profits, and that might cause me some issues with this trade actually, because it looks like it's bouncing off this minor support resistance area. So that's usually where I would take like 50%, but whatever. Like I said, the purposes of this webinar is not to win the trades. And also, you don't want to freak out when you see something like that. Even if it's not hit your first target, you don't want to freak out because you're not always going to get, right? When sellers take control of price, when you jump in short, they're not always going to go straight down and hit your target. It's unrealistic to expect that. Sometimes it's going to take time. Buyers are going to be fighting back on the way down. They just are. Buyers are going to be fighting back. So don't freak out when you get one candle like this. You know, if you start getting consistent higher highs and higher lows, if you start getting consistent higher highs and higher lows, then you can start considering exiting early. But if it happens for 1, 2, 3, 4 candles, don't worry too much about it. It's not that big a deal. I mean, you know, you start worrying about it when it's consistent, when there's a lot of higher highs and higher lows. Anyway, let's get rid of these drawings. Keep forgetting what key to hit. All right. Obviously, this is looking okay now. And target's hit. So this was an okay trade. And wow, target was like literally just hit. But see, this is what I was afraid of, right? This is what I was afraid of with this trade. And I was saying it before. Oh, wow. Did the recording stop? Oh, no, sorry. I thought I accidentally ended the recording when I hit a key. This is what I'm worried about with this trade. What I was worried about with this trade, sorry. And it was that the target, right? The target being down here, it's going to be hard for price to reach this point. It's going to be hard for it to reach this point because it's only done so once in the last few days, right? Last time it tried to get down here, it bounced away. So I was kind of scared with this trade that it might not hit this target here. Now, it literally just hit it, just hit that 2 to 1. But that's still, you know, you can totally understand why I was worried about that. Ian, yeah, you can define the spread. I think I've set the spread for GBP USD as 1 pip. So the spread right now is always going to be 1 pip. Someone's asking if a Forex Tester allows you to define the spread. You can also do a floating spread, but that costs a little more money for the data feed. So it just depends how you want to do it. I I just want to make clear, don't rush out and buy Forex Tester. There's free alternatives out there. Don't rush out and buy this software just because you're seeing me use it and you think it's cool. There's free alternatives out there that suit a lot of people. I bought this software because it's very good for webinars and for showing how I trade, but don't rush out and buy this software. Anyway, let's continue. So you can totally see and understand, hopefully, why I was afraid of this. I was afraid that price would not reach my target. Now, it just reached my target, but that's too close for comfort. That is a little too close for comfort. But let's see what happens when if price is going to continue down anyway. Now, we can start. All right, it would have continued down anyway eventually, but still, you understand what I'm saying. When you see something like that, you have to be careful. You have to be very careful. Oh, so price is hitting here. Let's look at this on a smaller time frame. I just jumped down to the 6 hour, but it's already triggered on the 6. No, but that preceding trend kind of sucks on the 6 hour. Let's look at it on the 8 hour. I know I said I wouldn't trade 6 hour, but I don't know. It's too late. That's the problem. It's too late to enter the trade, so screw it. Go back up to 12 hour. Okay, on the 12 hour now, we got this candle. Now this looks like I'll answer that question in a second, Costas. It's an important question. Okay, let me do a few quick numbers on this. Okay, I'll tell you what I'm thinking right now. I'm thinking this trade has potential for 3-to-1. There's potential here to take 3-to-1 on this trade. 3-to-1 is a nice number on a daily chart, on a 12-hour chart, on an 8-hour chart. 3-to-1 on a trade is a nice number. So this trade, I'm not that confident with the look of it. The preceding trend is very messy, and price is probably going to struggle around about this point. Price is probably going to struggle around about this point. Now, my job here as a trader is to try and decide whether it is worth the risk. So the risk is going to be, if I take this trade, the risk is going to be around about 45. I'll probably take it a bit higher. I'll probably enter here. I just don't want price to come up a little bit above the high of this indecision candle and then drop back down. So there is some risk here. But yeah, if I do this, we got 55 pips. There's potential for, wait, let me do, yeah, 165 pips is. 3-to-1 is a little bit greedy though. It's hitting the resistance area. It's hard to make these decisions fast, and it's hard to make it with everyone watching me. I have to be honest here, because like if I was doing this live, like, you know, live trading in real time, this is a 12-hour chart, so I would have a lot longer to make this decision. Doing it live in front of everyone like this, and I have to make my decision quick, is a bit daunting. It's very daunting. I think it's worth the risk though. I mean, 3-to-1, it's worth it. I might not get 3-to-1 exactly, but I might be going 2.8-to-1. But that risk reward ratio is nice. It's very tempting. And we're getting some very clear support here. I'm going to switch to the daily. I just want to see what this looks like on daily. Oh yeah, but that candle's not complete. I don't think. That's 12. Yeah, that candle's not complete. So yeah, let's go back to 12-hour. I'm going to do it. I mean, if it's a failed trade, it doesn't matter. Set my entry around about here, roughly. Stop loss. You know what? This is not going to be a 3-to-1 trade. I'm not going to put my stop loss here. That's too tight. It just, sorry, but it is. I'm going to put my stop loss here. The reason I'm putting my stop loss here is because recently price pushed down to here. So that was a very recent push down to here. I think that sellers have the potential to get back down to here. So I don't want to place my stop loss where I originally wanted it here. It just feels a bit too risky. It's too tight a stop loss. So we're not going to get 3-to-1. We're not going to get 3-to-1, but it's still a tight stop loss. 65 pips is still, yeah, it's still pretty decent. It's still doable. So let's look at risk reward ratio wise what this trade will be. So 612, 130. I set my target around about here. It's going to be better than 2-to-1. Just off the top of my head, around about 2.3-to-1. And calculate my. It's the same as the last trade, 0.15. Okay, let's do this one. Well, that wasn't exciting at all. That just happened way too quick. I was really hoping for that one to kind of play out a little longer. That might have been news related, to be honest, because that was a fast move. That's the bad thing about Forex Tester, is you don't know if news was coming out then. So I might not have taken this trade in a live scenario because it might have been a news release, and I don't really trade through major news releases. So, yeah, well, it was profitable, so I can't cry too much about it. Yeah, I know I can look up news on Forex Factory, Rich. I know I can look up news on Forex Factory, but it would just be, it's going to be too much of a hassle going back to Forex Factory, trying to get the time right on Forex Factory with the news releases and stuff. It's just too much of a hassle. I want this webinar to be kind of like, you know, quick and somewhat efficient. I don't want to spend ages trying to figure out, you know, if there was a news release at that time. I just accept when I'm trading through Forex Tester that there are going to be some news releases and they are going to affect my trades. You know, it's just something I have to accept. Sometimes there's going to be a news release and it's going to have a bit of an impact on my trade. Yeah. All right, anyway, let's keep going. All right, this formation here is somewhat interesting. Somewhat interesting. I'm going to go up to, or down even to 8 hour. That would have already been triggered though. The problem with this is it's over a weekend. I don't like trading over a weekend, especially when gaps are involved. It gapped up. I'm just going to skip this. I'm not going to enter it. I mean, like, trades like this, let's go up to a 12 hour real quick and see. Yeah, it doesn't look good on the 12 hour, but it looks okay on the 8 hour. I'm not sure if I should enter this one. Again, this is very nerve-wracking. Doing this in front of people is very nerve-wracking. Like I said, on an 8 hour chart, I'd have so long to make a decision, but no, I'm not going to take this one. I'm going to go with my instinct. I'm not going to take this one because, you know, it's split by a weekend. I don't really like trades that are split by the weekend because I start to think that this preceding trend here, you know, it's split by a weekend. It's gapped up. So it might no longer be valid. I don't know exactly what happened over the weekend. Price could have pushed up to here and then come back down. So I don't know what's happened over the weekend. So I'm probably just gonna, yeah, I'm not gonna take this trade. Screw it. All right, well, that would have been profitable. But still, you have to have rules in your trading and you have to follow your rules. So it's one of my rules. And, I would have been profitable, but it would have been a very nice trade. In fact, not just profitable. That could have been, what, 3-1? Yeah, almost 3-1. But, whatever. You just have to... Okay. Okay, this is another trade that I'm thinking about potentially taking, but... What time is it on Thursday? It's Thursday. Is that 12 on Thursday? Yeah. Okay. So this setup looks decent. It looks decent. We got a nice strong preceding trend. So we got sellers heading into an area of resistance, and at that area of resistance, they just stall. And we get this candle here. Now this candle is definitely suggesting that buyers are fighting back. It's forming on top of a support area, and that support area held quite nicely. It actually gave us a trade on the way up. So that support area has held nicely. So essentially, this meets most of the requirements. The indecision candle is not that good. Just right off the bat, I have to say the indecision candle is not that good, but there's really no other reason not to take this trade. I just don't feel good about it, to be honest. I just don't feel, it just feels off. I don't like this setup. I'm going to take it, whatever. I'm not sure if I would take this one if I was trading, if this was like a real account. I'm not sure if I would take this one. It just feels a little iffy. So let's look at the numbers and just make sure that it's a viable setup. I want my stop loss here. So that's a 60 pip stop loss. Now, why do I want my stop loss here? It's similar to the other trade. Price has pushed down to here recently. So if I were to place my stop loss here, that candle could push down to here, take out my stop loss, and then continue up. So because price has been down to here recently, I want to put my stop loss just below there. So to take out my stop loss, sellers have to make a new low. So, it's just that little bit of extra protection. So a stop loss of 60 pips. Oh, wait, I just want to double check. That was 60 pips. Okay. All right, I'm just going to straight up go for 2-1. I'm going to go for 120 pips. I don't like this setup that much, so I don't want to push it. And someone said, "Is it the bearish wick?" It is the wick. That upper wick there. It kind of worries me a little bit, because when I see this wick here, right, it makes me think. Buyers have tried to push up already. They got to here and they got pushed back down. So buyers have made a pretty decent effort at pushing up, and sellers were able to turn them around. So it's kind of telling me that sellers are somewhat strong. Yeah, I'm a bit concerned about this trade. I don't like the setup. I don't feel good about it. I would say there's a pretty high chance that this setup is not going to work out. But it's February 23rd, 2012. You can see it down here. Okay. So I just want, I'm not sure if this is going to trigger, but oh wait, we'll wait till it triggers. Yeah, cool. Nice. So yeah, it wouldn't have made a difference. So this is kind of silly, but I just want to explain this anyway. So let's pretend just for the sake of explanation, let's pretend that this actually triggered before it spiked down here, right? And I'd placed my stop loss here. I would have got taken out on this trade. This is why I place my stop loss. I try to place my stop loss when I can. I try my best to place my stop loss at an area like this, because price has been down here recently, right? So it's going to be easy for sellers to get back there. They've been there, 6-8 hours ago, so it's going to be pretty easy for them to get back to that spot. It doesn't always happen, but when I can manage it, I like to place my stop loss in the safest possible spot. And in this case, this is the safest possible spot. It doesn't seem like it would have mattered here because it spiked down before it actually triggered. But, it could have triggered and then come back down and spike down here. Just the point that it spiked back down here, that's why I do this. That's why I try to do the stop losses like this. Okay, so I guess I was wrong with that trade. I probably wouldn't have taken this one if I was trading live. I have to be honest, I probably wouldn't have. It just didn't feel right to me. I mean, it ended up being profitable, that's fine, but it just didn't feel good to me. But, I always say this to people in the forum. I always say to them, I don't like to take a lot of risks in my trade. If I don't feel good about a trade, I'll just not take it. And that is both a good thing and a bad thing, because for me, that keeps me out of a lot of bad trades, but it also keeps me out of some good trades. So me being the way I am with risk, I probably wouldn't have taken this one live, and obviously I would have been able to make quite a bit of pips here. Now, someone else trading my strategy, they might see this as a good trade to take. It might make sense for them to take this trade, because for them, it's not, their risk assessment says that this trade is okay. They're willing to take more risk than I am. So, this is a trade according to my strategy, but still, I probably wouldn't have taken this one live. I have to be honest, I probably wouldn't have. I'm gonna go 12-hour and daily. So I want to see what this is looking like. I'll stick to the 8-hour for now. Oh, that's a weekend. That's a weekend. Okay. I'm gonna go back to a 12-hour. I don't know. It's a weekend trade, isn't it? I mean, I've said it before. I don't really like it when a trade's split by a weekend. So that's why I skipped this trade here. Let's go back to the 8-hour. Let's see what it looks like on there. I'm not going to take it. It's split by a weekend. I'm going to follow, the rules that I have in my trading strategy. I do want to take some trades that I wouldn't otherwise take, but this is a pretty solid rule in my trading strategy. If it's split by a weekend, I tend not to enter it. Yeah, that would have been a failed trade there. Okay, cool. So let's push forward. Now let's zoom out a bit because, yeah, that's better. Nah. That candle looks interesting. I mean, I know it's not on top of I know it's not inside the support area, but let's just see if we can get... Nah, no way. Not going to get a decent risk reward ratio. Not worth it. Nah, it wasn't worth it. Okay. This is an 8-hour chart. This looks like it could end up being a decent trade, but that candle formation just doesn't. I don't really like that. It's not good indecision. Split by a weekend again. Damn it, these weekends, they're showing up a lot. All right, well, split by a weekend, not going to take it. Okay, this one looks a bit more interesting. This is a Tuesday. I don't like the preceding trend, okay? The preceding trend kind of sucks, right? But that could just be because I'm on the wrong time frame. So let's go up 12-hour. That candle looks a lot more decent on the 12-hour. All right, I'm just going to hit backspace and then, yeah, I just wanted to make sure that that was a complete candle. All right, let's look at numbers. Let's see. Assuming an entry down around about here, stop loss 70 pips. Yeah, we can easily hit 2 to 1 on this. No problems. Yeah, screw it, I'm in. Well, if it triggers, I'm in. But I'm going to set pending. So we're looking at a stop of 70 pips. I'm going to go with 70. Right. I haven't really been doing my I haven't been strictly doing my risk calculator, but whatever. All right, so 70 pip stop loss. We're looking at 2 to 1, so I want about 140 pip target. Keep in mind, this is kind of a simplified way of how to take profits. I'm just doing it this way because it's kind of easier to do in this webinar. My profit taking is slightly different to this, but this is just going to be a whole lot faster. And also, I'm considering changing the way I take profits. At the moment. Okay, so we're already triggered in. And we're out. That one didn't last long. Yeah, okay. It happens. I mean, there's no real reason why this trade failed. I mean, if you look to the left, you do see some minor support resistance here. But it's not enough minor support resistance to keep me out of the trade. Yeah, it's just a bad trade. I mean, it happens. Screw it. Onwards. That preceding trend's too small, so I wouldn't take anything here. How do I spot minor resistance? That's a good question. Yeah, that's probably something I actually should have talked about. I can talk about it here, I guess. Let's see what this looks like a potential setup. Again, it's split by a weekend. Let's enter this setup, right? I probably wouldn't enter this one because it's split by a weekend. But let's enter this just so I could talk a little bit about minor support resistance. So, I mean, even if we don't have a good risk-reward ratio, but I'm pretty sure we will. So I'm going to short here. Stop loss of 66 pips. So we're looking for a 130 pip target, which is easy. Okay. Yeah, that looks decent. Okay, so I'm going to place this. Now, minor support resistance. How do I spot minor support resistance? Someone asked. Spotting minor support resistance is pretty straightforward. You just look to the left. So I'm looking at this potential trade. I want to jump in short here. The first thing I do is I look to the left. What do I see to the left? I see that price struggled very, very strongly here. It actually came up here and bounced away. So price struggled a lot here. So when price comes back down, it's very possibly going to struggle in this same area. It's very possible that price is going to react very strongly in this area. So I like to be prepared for that. Sometimes I'll take out half my profit here because price might struggle in that area. I take out some profit. I do some profit taking here. So it really, minor support resistance is very, very, very useful. You need to look to the left. When you enter a trade, you just look to the left. And if on the left, you see, obvious signs that price has been held up in the past, it's very likely that when it comes back down there, it's going to be held up. Now, let's see if it's, all right, that would have just been a failed trade straight out. I was hoping that price would sink at least to here and then we would see the minor support resistance in action, but yeah, that would have just been a failed trade straight up. And that's why I don't trade over the weekend. Again, this is split by a weekend, so I'm not going to take it. No, that would have been a successful one, but what can you do? You have to follow your rules. Ooh, we're at 1 hour. Yeah, we're at 1 hour, so we need to do questions and answers time. Okay. Where can you find my rules? Just on the website. So you want to know about my trading strategy? Oh, 1 second. I'm trying to bring up the page. Okay, cool. Basically, you go to forexfornoobs.com and you click free strategy, and I outline my strategy in detail. It's like an ebook, but it's on the website. I should probably turn this into an ebook. I've just been a bit lazy with it. But yeah, this explains my trading strategy in detail. How often do I rearrange my support resistance areas? I rearrange my support resistance areas quite often. Wait, why am I logged into my own website? 1 sec. I'm just gonna show you guys support resistance areas. I'll fix my support resistance areas pretty much every single week. What you're seeing on the chart right now are daily support resistance areas. I was just using daily support resistance areas because I wouldn't be trading 4-hour, 3-hour charts. So I was using support resistance areas that were a little further spread apart, but it doesn't matter. It's still the exact same as my strategy. Current SR. So yeah, there's support. My support resistance areas are all listed on this page. All right, I need to move this so I can paste it in. But I also put them in my blog. I do weekly analysis in my blog. Anyway. How many trades do you take per week, roughly? It's hard to say. Okay, that's a really good question, James. I roughly take about 1 to 2 trades per week. But that's because what I was talking about before, I am very, wait, let me, yeah, that's better. I don't take very many trades because I don't like to take risky trades. So I wait for the perfect trade setup. So I take 1 to 2 trades per week, but there's people trading my strategy in the forum that are taking 5 to 6 trades per week. It just depends. The last few weeks have been very slow though. The last few weeks have been very slow. This week I've not taken a trade. Because of the G7 meetings, there was no trades early in the week and then the G7 meetings. Last week, I think I only took 1 trade. The last few weeks have been very slow. It just really depends on the week. What is the minimum account size you recommend for being successful? I mean, if you're serious about trading, you're going to want to start with at least £5,000 or 5,000 US dollars. It really, really depends. Um, but I wouldn't put £5,000 in when you're starting. You know, you have to split it up into milestones. So let's say 5,000 is your trading capital. If you're new and you're inexperienced, you don't want to start with 5,000. Start with about £100 or something. When you're able to build that £100 up to £400, then you can maybe add another 200, 300. When you're able to build that up to 1,500, then you add in another 500 and you bring it up to £2,000. So don't go in with £5,000 right off the bat, because you're new, you're inexperienced, and you're going to end up losing that money if you make too many mistakes. You want to have like a small amount, and you set yourself some milestones. When I hit £500, I'm going to add £500 to my account and get it up to 1,000. When I hit 1,500, I'm going to add another £500 and bring it up to 2,000. You know, setting those milestones will help you tremendously. You currently trade the 12-hour chart. You find the best entries come at 10 a.m. UK time after the Asian session. Yeah, it actually depends. It depends from year to year. Sometimes you'll get your best entries at, 7 a.m. and sometimes you'll get them mostly around 7 p.m. It just depends on the year. Forex is very strange like that. It changes a lot. Like, for example, last year during summer, the average daily range of pairs just dropped down like crazy. And it was really, really hard to take any decent trades during summer last year, 2014. I mean, the point I'm trying to make is the Forex market changes a lot. There's a lot of different phases and things are constantly changing, and you have to constantly adapt. So perhaps right now you're finding most of your trades at the end of the Asian session, but keep in mind, it's not always going to be like that. If you are trading the end of the Asian session and you're seeing that no more trades are showing up, or you're only starting to get one trade every 2 weeks, don't start thinking, oh, there's something wrong with your strategy and you're going to change up your strategy. Just understand that the Forex market is probably changing. Things are changing. So you have to look at, trading at a different time. I mean, even seasonal changes are quite common. In the Forex market, summer is pretty much consistently the slowest period. I've actually got statistics for that, which I can show you real quick. Forex data. All right, let me show you something cool. Maybe Euro USD. Yeah, okay. So I've been compiling these statistics recently. All right, it's going to be hard to explain what's going on here, but we can see in 2014 the average daily range dropped down to 63 pips. This is Euro USD. In summer, 52 pips in summer. That's summer. That's the average for the year. These statistics only really make sense to me. So this is summer, and we can see the average daily range drop down very, very significantly in summer. It dropped down to 52 pips, and the spring before that it was already pretty low. The summer is pretty consistently the slowest time of year to trade. So the point I'm trying to make is the Forex market goes through a lot of phases. So don't get stuck on the idea that your trades are going to come at the end of the Asian session. Right now that might be happening, but that's probably going to change in future. Do I have any seminars in London? I have never done a live seminar. I kind of want to do one really, but I don't know. The main rule for setting up my stop losses, I'm going to need more screen space for that. Wait, maybe I can leave this here. Okay, it's a tough question. Let's see. Can go back a little bit. Yeah, all right, this trade here. trade here is a decent example. Okay, so some rules for setting up my stop losses. It's quite simple. Well, let me get rid of this trade because it's kind of blocking the view. All right, so some rules for setting up my stop losses. It's pretty simple, and it depends a lot on the candles, really. So the idea is basically your stop loss has to be as tight as possible without being too tight. Now, I know that's a little bit hard, but you need to have a realistic stop. It's what I like to call a realistic stop. Some people, you know, they'll look at the target for the trade and they'll realize that the best potential target is here. So that's what they're looking to take on that trade. It's about 60 pips. And then they'll take the stop loss and they'll try to make the stop loss fit with that target. So their target, let's say it's 70 pips, let's just call it 70 pips. So they're going to need a 35 pip stop loss. And then they'll say, okay, I'm going to put my stop loss here. Now that stop loss, you know, it looks somewhat safe, but it's not a very safe stop loss. You know, people tend not to be very realistic with their stop losses. They tend to move their stop losses to fit what they want to take on that trade to get a good risk reward ratio, but that's not how it works. It's always smarter to set your stop loss first. If you set your stop loss first, and I don't always do this personally, I don't always set my stop loss first, but that's because I'm very strict with my risk reward ratio. So, and I've been doing this for a long time, so I know what I'm doing. But if you're new, you should set your stop loss first. So the first thing you do is you set your stop loss. And my stop losses are set basically at the high of the indecision candle. When I can get it, I'll set it at the high of the indecision candle, just a little bit beyond. And the reasoning for this, the whole reason I'll place my stop loss like that, all right, let me zoom into this thing, is because I know that since buyers have, let's make this red so it stands out a bit. Since sellers have been able, since buyers have been able to hit this high very, very recently, then it's very likely that if I were to set my stop loss lower than that high, there's going to be a higher chance of it being hit. So if I have to, I might set my stop loss here. Now, why would I set my stop loss here, even though buyers have pushed through here recently? Because I have something else protecting me. I have the resistance area protecting me. So this resistance area here, this is providing some sort of protection. So if sellers were to break through here, to hit my stop loss, they're going to have to get through this resistance area. They're going to have to break all the way through this resistance area. They're going to have to get through the other side of that resistance area before they hit my stop loss. So that's a relatively safe stop loss. That's the tightest stop loss I'll likely ever use, having it on the other side of my resistance area. But the safest stop loss, and this is what the safest one is here. And that's what I try to aim for most times. I try to aim for that. If I can get that stop loss and still have a good risk to reward ratio, I'll use that stop loss. I'll put it above the high of the indecision candle. And I'm putting it above the high of the indecision candle because, like I said, buyers, once sellers push down, to hit my stop loss, buyers are first going to have to break up through this resistance area, which is going to be quite tough for them. And then they're going to have to make a new high. And a new high is significant on a chart. A new high indicates that buyers are in control of price. When buyers make a higher high, it indicates that they've got the power, they've got control. Because sellers, it's in a seller's nature to stop a buyer from making a higher high. When buyers make a higher high, so when they break the high of the previous candle, that indicates that they're in control of price. And if I'm short and buyers take complete control of price, I probably don't want to be short anymore. So I'll place my stop loss up here, up above the high of the indecision candle. If I can get my stop loss above the high of the indecision candle, I will place it there. But yeah, like I said, it doesn't have to be there. As long as you place it on the other side of resistance, it's all good. It's what I like to call a safe stop, a semi-safe stop. So semi-safe stop is here, and then anywhere here, unrealistic stop or stupid stop. And I'll sometimes use a stupid stop if I feel really good about a trade, but it's a rare thing. I try not to do it. Try to get it on the other side of resistance. Do I look at a small time frame if I'm taking a trade? I've been doing that more and more recently. But it's mostly what I do is, all right, let's say I was on the 6 hour, right? Or let's say I was on the, we'll go even lower, we'll go 3 hour. Let's say I was looking at the 3 hour and, oops, I see prices reach to, well, let me zoom out. That's, yeah, that's better. All right, so we're on the 3 hour, prices reached here, and we get that candle. That looks kind of like indecision. Then we get that candle, and that, it looks like price is stalling here, right? And we already know it stalls here, but let's just pretend we didn't. So, you know, price is stalling here, but I realize you haven't got any solid indecision here. This time frame is too low. So I'll switch around the time frames to try and look for some clear signs that buyers, sellers are taking control of price. And, you know, here it's starting to look good. This is the 4 hour chart. You know, I might be willing to take a trade here, but, you know, still not looking that good. So pop up to the 6 hour. All right, 6 hour, that looks a lot better. So I might stick, nah. I don't like this candle that popped up here before coming down. So we'll go up to the 8 hour. No solid indecision on the 8 hour. And we'll go up to the 12 hour. And that's where it starts to look good. So I'll change the time frames just to get a different view of price action. Because, you know, price action is sometimes hard to view if you're looking at a single time frame. If you're looking just at a 3 hour chart, you're going to miss a lot of trades on the larger time frames, because the price action, you're just viewing it through a different scope, let's say. So I switch around my time frames quite a lot. It's actually how I identify most of my trades. When I come to my charts, like I'll check my charts, let's say every 4 to 8 hours. Roughly every 6 hours it ends up being, I'll check in on my charts. So I'll jump down to the 3 hour, I'll look at the 3 hour and I'll say, no setup here. Then I'll go 4 hour. Oops. Then I'll go 4 hour, no setup there. And I'll just flick through my time frames until I see a setup. Even if price doesn't look like, even if on the 3 hour, price doesn't look like it's at a resistance area, I'll still do that process. I'll still go through 3 hour, 4 hour, 6 hour, 8 hour, 12 hour daily. I'll still go through all the time frames every time I get to my charts, just so I get into the habit of it. Well, I am in the habit of it. I've been doing it for ages, but you know, it's just to keep up the habit. You just go through every single one of your time frames for each and every pair you're trading. Sounds like a lot of work, but literally it takes 5 minutes. You know, you're just flicking through time frames really quickly. Eric, hi Nick, what do you use to determine when to exit a losing trade before it reaches a stop loss? That's a really good question. I kind of wanted to do that today. I was really hoping for a trade that I was going to kind of phase out of, because it wasn't... Let's see if we can find something real quick. I don't really like using Forex Tester in this way, where I rush forward and then I go backwards after I see a setup. It just doesn't... It doesn't feel like it's a good way to use this software. I don't want to get used to doing stuff like that. But for the purposes of this, let's see if we can find a trade that kind of failed, that we could have got out of early, and then we'll go back and we'll trade it. Nah, not that. Actually, that's a pretty decent example. Yeah, maybe I wouldn't have closed that one out early though. Right, what is this, 12 hour? Let's go down to 8 hour. Yeah, okay, this is a decent example. Let's take this trade here. Would have been a failed trade, but I probably would have got out of this one a bit early. So we got a nice strong preceding trend. right? We've got indecision forming on top of a support area. So it's looking like a decent trade setup. Obviously, I would do my my numbers, but it's quite clear that this would be a profitable trade. Well, not profitable, sorry, like risk reward ratio would be good for this trade. So let's go in around about here. Put a stop around about here and stick a target. All right, we know it fails anyway, so it doesn't matter what the target is. What I'm trying to show you is how to get out early. Yeah, you get a link to the webinar. The webinar is recorded. I'll be posting the webinar. So far this trade is looking decent. We're in the trade. But here it kind of starts looking bad, really. You know, we're getting free, consistent lower lows. That's a bad sign. Like I was saying, lower lows indicate sellers are in control of price. So the lows are getting lower, the highs were getting lower too until this candle. Obviously that spiked up. So that starts getting a little bit concerning. I might have stayed in this trade, to be honest. I thought it was a good example, but in reality, I probably would not have closed out this trade. Yeah, sorry. Oh no, okay. I probably would have closed out this trade at this point, right here. This is probably where I would have jumped out of this trade, right? This trade has had, we're taking it on the 8 hour, so it's had 8, 16, 24, 32, 40, 48, 56, 74. I really think I'm doing some bad math here. But it's had something like over 70 hours, right? And it's still not managed to hit its targets. It's still not managed to move up. We got a period of lower lows here, and then it started moving up again, and I thought, okay, I might stay in this trade. But then we get this indecision candle here. And keep in mind that indecision, we're using indecision to enter this trade, right? We're entering this trade based on indecision here, and then indecision turns into buyers being in control of price. I don't want to see an indecision candle in the middle of my trade. You know, maybe if it happened up here when it was close to my target, okay, whatever. But price isn't even close to my target. And price has been dancing around my entry for 70 odd hours. And then all of a sudden I get indecision, and then the next candle, price starts moving lower. You know, this is the point at which I would probably exit this trade, because I've given the trade a long enough chance to work out. And it just hasn't been able to, buyers haven't been able to make new highs and maintain those highs. Whenever they start pushing up, sellers regain control of price and push down. So free lower lows, you know, I might have exited here, but, you know, I might still have held out. I might still have held out, but at this point, when you get that fourth lower low, coupled with an indecision candle, you know, you just have to, the trick is, right, to ask yourself who's in control of price. You know, you constantly have to ask yourself that question, who's in control of price? So we assumed that sellers had taken control of price when we entered this trade here. That was our assumption, and our assumption looked good up until this candle. When this candle came along, it started looking like buyers, sorry, I was saying sellers, I meant buyers. We've entered this trade assuming buyers are in control of price, buyers are in control. All of a sudden, it looks like sellers are taking control of price. So if you're asking yourself that question constantly, who's in control of price? Who's in control of price? And it starts to become very, very obvious that sellers have taken complete control of price, that's when you start considering an exit. So you enter here, who's in control of price? Buyers are in control. Buyers are in control. We're getting new highs. Buyers are in control again. We've just got another new high, closed with a bullish body. Who's in control? Looks like sellers are taking control of price. Who's in control? Looks like sellers are taking control again. Who's in control of price? It looks like buyers are taking control, so I'll still hold out in this trade a little bit longer. Who's in control of price? It looks like buyers are maintaining control. I'll still hold on to this trade. Who's in control of price? I'm asking myself that question again. And now I have to say to myself, it's indecision. It's undecided. Buyers and sellers are struggling quite hard. And it looks like overall sellers are taking control of price. That's a pretty decently sized bearish body there. I ask myself again, who's in control of price? And at this point, the answer is very, very clearly sellers. So, you know, that's where I would start considering exiting. I'd probably jump out of this trade here. And obviously, we already knew it would have been a failed trade, so. Alfredo, what about everyday news? How do I manage news? Sorry. Wait, I'm going to move this. It's just hard having it on this side of the screen because it's harder to read. Okay. Yeah, okay, so the question was, in this example, the trade is taken over about 2 days. So you're asking about news, how I handle news. I don't really care about 95% of news releases. I just have found over the last few years, if you start to worry too much about news releases, you're almost never going to be able to take a trade comfortably. So I've just started saying, screw it, I don't care about news. I mean, there are news releases that do worry me. NFP, I don't trade through NFP. Or for newer people, that's now called, what's it called now? Non-farm employment change. So now it's NFEC or something like that. It used to be called non-farm payrolls back in the day. And I still call it non-farm payrolls. So yeah, I won't trade through the NFP report. That's definitely something I'll stay away from. This week, G7 meetings, I did not trade this week. I have not taken a trade. I'm probably not going to take a trade for the rest of this week. Just, I don't want to trade through G7 meetings because what's the G7 meeting? It's just speeches. It's a bunch of politicians talking about the economy of Europe at the moment, mostly. And that's going to have a huge impact on price, and it already has. There was a trade taken on the forum this week. Some forum members took a trade that seems to have failed because of the G7 meeting. And it could have failed for other reasons. I'm not 100% sure it failed because of the G7 meeting. But the point is, speeches are something that I avoid. So speeches by central bank leaders, G7 meetings, something like that, that would keep me out of a trade. But for the most part, I don't really care about news. Dane, do I only trade with buy-sell stops? No. A lot of times I'll use market orders. It's just easier when using Forex Tester to use buy-sell stops. Do I ever use trailing stops? No, I never use trailing stops, but I do raise my stop to protect profits, definitely. If the trade has moved kind of like to the halfway point, I might move my stop loss to break even. What do I recommend besides Forex Tester? Honestly, I haven't really tried many of the options. There's a Simple Forex Tester or something like that. I think that hooks into MT4 and it's free, I believe. I could be wrong about that. But also there's a Trade Interceptor has something called the Trader's Gym. Trade Interceptor. And I haven't tested that, but I've seen a few YouTube videos and it's pretty decent. I mean, Forex Tester is pretty much, as far as I've seen for Forex, it's the best in its field. But this program is expensive, and I really think that it is not needed for the majority of people. I would really recommend looking for a free alternative. Do I recommend brokers who have tight spreads? I don't recommend brokers. I don't like recommending brokers to people. I've recommended brokers in the past and then something went wrong with the broker and then people come to me and they say, oh, you recommended this bad broker, you cost me money. But, you know, at the end of the day, it's not really my fault that they didn't do the research themselves. And I just don't like, I really don't like recommending brokers. I'm sorry, I don't. All I can say, okay, this is what I say to people in the forum. All I can say is that I know people who are using Oanda, Jukascopy, and they are all very happy with Oanda and Dukascopy. I am. I've been using Dukascopy. Well, I've used Dukascopy in the past. I'm going to be using them again soon. I'm happy with Dukascopy. For Americans, I know a lot of American traders using MB trading, and I've not really heard anything bad about MB trading. And on the Aussie side, I know a lot of traders using Pepperstone, and they're very happy with Pepperstone. I'm not recommending any of those brokers. I'm just saying in my forum, there's a lot of people using those brokers, and they're all very happy with it. Wait, I should clarify, Oanda, some people are annoyed with the widening of spreads during news time, because spreads do get crazy wide with Oanda. So keep that in mind. If you're going to be looking at a broker, test their demo platform thoroughly. And when you first open an account with a broker, make sure you open a very small account and you test them live for at least 2 or 3 months before you put any serious money with them. And also make sure your broker is regulated in a decent country. And by a decent country, I just mean most first world nations. If your broker is regulated in the US, the UK, Australia, New Zealand, Sweden, obviously. Sorry, did I say Sweden? I mean Switzerland, but Sweden's fine too. So yeah, Swiss brokers, regulation is the most important thing. So yeah, regulation. And there's a pretty extensive, I have a very extensive course on how to find, it's part of the free course, how to find the perfect broker for yourself. Here you go, free course. forexmoves.com/free course, free-course. And yeah, there's a very extensive guide to finding a good broker. Felipe, do I take trades when price breaks levels? No. I only trade reversals at the moment. That's a good question, man. Once a trade triggers, do I check back or do I just leave the trade? I personally usually will check back, but I do highly recommend, if you're new to trading, to just not check back. Once your trade triggers, just leave it. I find that a lot of new traders, let's look at one of the trades I took and see if we can find a decent example, but they all seem to have gone in my direction pretty quickly, so I doubt we're going to find a decent example. Yeah, there's not going to be a decent example. Screw it, I can't. The point is, a lot of traders will jump out of a trade early just because it doesn't seem like it's going in their direction. And you don't want to do that. Just the most effective way of not doing that is to just set your targets and you just leave your computer and you just don't look at the trade. Yeah, looks like a lot of people are leaving because we have been going on about an hour and a half now. So I think I'm going to end this webinar. Before I do, I want to ask for honest opinions. Did you guys find this webinar useful? Was it good? Do you guys want another webinar like this where I forward trade? If you didn't like the webinar, if you had a problem with the webinar, feel free to tell me. I won't get annoyed. I would like to know if there was something wrong with the webinar. All right, well, it looks like the feedback is pretty good so far, but if you're embarrassed to say in public that this webinar sucked, feel free to send me an email and tell me if there's something I could improve with this webinar. Someone's talking about placing, so yeah, I actually, there is a bit of an easier way of placing support resistance areas, but we can discuss that some other time. No, no way am I trading gold or silver. I don't like trading commodities. If I was stressed out trading this in front of you guys, GBP USD, a pair I trade very often, trading gold or silver, I'll probably start crying in the middle of the webinar. No. Commodities scare me.